Welcome, everyone. I'm Lisa Esquivel-Long, editor at KPC Media's Greater Fort Wayne Business Weekly, and I'll be your moderator for today's webinar. This is the second in a new monthly series that we're bringing free to subscribers. The topic of today's webinar is commercial lending for small to medium businesses, sponsored by Premier Bank, with a presentation by the U.S. Small Business Administration. We want to hear what you're concerned about. So during today's webinar, please ask your questions by going to the question and answer section that you'll find on the right-hand side of your screen. We'll go over your questions at the end of the presentation. Being one of the little guys can be difficult when it comes to finding financial resources. The SBA has been there to help distribute the CARES Act funding through the Paycheck Protection Program, but it has a wealth of other types of resources, including mentoring as you get your business off the ground and direction on how to go to banks and credit unions to secure a loan. Here with us today is Luann Lawrence, Lender Relations Specialist with the SBA, and Jim Swift, Vice President of Commercial Lending for Premier Bank, which is a preferred lender with the SBA. Luann is going to talk to us all about the SBA, what the SBA does, and how it can help your business secure financial resources. Welcome, Jim and Luann. Please tell us more.
Hi, can you hear me?
We can.
Okay, great. I'm using this from my phone, so this is a new experience for me. So yes, thank you for having me. And I've got a slide presentation to go through today. So if you have questions as we progress through, feel free to ask your question and we'll go from there.
Okay.
So are you ready?
Go ahead.
Okay, so if you want to go to the next slide. SBA works, we're here to start, grow, expand, and recover your business. That's kind of our motto at this point in time. So we're here to help businesses get off the ground and get running and assist with business counseling and training and obtaining government contracts. And we'll cover all that today in the presentation. Next slide. So we're going to, SBA increases your confidence in business sparks by the various programs that we have. Next slide. So we do have a partner network throughout the state and throughout the nation. They're funded through various means by SBA. There's over 1,400 different offices available nationwide. And if you're looking to find the one closest to you, you can search that at sba.gov/local-assistance, and your resources in your local area should come up. Next slide. So out of those resource partners, we're going to walk through and talk about ones that could be right for you. Next slide. So which resource partners are right for you? In the Fort Wayne area, there are 3 different resource partners. There's the Indiana Small Business Development Center, the SCORE office, and the NIC, the Northeast Indiana Innovation Center. SCORE and NIC are housed in the same building, but they're all up there pretty close to each other.
So anyone, Luann, in this region can contact any of those Fort Wayne?
Yes, definitely. If you have any assistance, the Northeast Indiana Innovation Center is part of our Women's Business Center. So they operate off a women's business grant through SBA. So their primary focus is helping women, but they do help everyone. And then SCORE and the Small Business Development Center are available for everyone as well. So yes, definitely reach out. I always recommend reaching out to all 3 because through those conversations, you might find one that fits your needs better than the other. Any other questions?
Nope, go ahead.
Okay, next slide. If you have questions about SBA, Indiana only has one SBA office, and our office is in Indianapolis. So our address currently is at 8500 Keystone Crossing in Indianapolis, which is right across the road from the Keystone at the Crossing Mall. I will give you a heads up that we will be moving out towards the airport later this year. So that address is not going to be there much longer for us, but We'll update our website with our new address as well once we get moved. But at the current time, that is our office address. However, all of us are teleworking due to the pandemic. So the best place to try and reach us is through our website, our emails, our personal phones. That's the best way to, and all of that also is on our website as well.
Okay. And Luann, we'll also have that in our presentation, that information at the end so that people can contact.
Perfect. That sounds great. Thank you. Next slide. So another way SBA works with our small business customers is through building your capacity. So next slide. So we do federal contracting. So there's 23% of federal contracts are supposed to be dedicated to small business owners to help them start and grow your business. We provide the world's largest customer because we are the government. We require by law to provide contracts to small businesses. And if you're interested in learning more about the contracting, there is a website, the SBA.gov/contracting, where you can obtain some additional information. Next slide. SBA can help you evaluate your readiness for contracting. So federal contracting can represent a very profitable market for your business. It can help you expand and grow your business. Can be extremely complex to get started. So SBA can help you get your feet in the ground. So they look at marketability, your structure and experience, what systems and capacity your business has, and your ability to find contracts. Next slide. The quality for federal contracts with certifications, you can obtain different certifications for the contracting program. The contracting program has the 8A, just the regular contracting program. We do also utilize the hub zone, the underutilized business zones with the contracting. Also, the contracts do have advantages for women-owned businesses and service-disabled veteran-owned businesses as well. So as far as getting a certification for your business and how that helps you, the more certifications you can have, the more contracts you'll qualify for. Next slide. Also with the contracting program, we have a small mentor protege program where you'll partner with an existing business in the program to help you get some experience with government contracting and doing business. They can help you strategize, contract, and partnership with opportunities, navigate for bidding and acquisitions, and help manage contracts and secure appropriate business and financial systems, resources, and financial assistance. Next slide. If you're looking for local assistance in Fort Wayne to help with contracting questions, the PTAC, which is the Procurement Technical Assistance Center, has a location in Fort Wayne. The contact there is Robert Warner, and he is also located with, I believe, the SBDC office. Next slide. So another avenue that SBA helps with, which is a big part of our agency, is providing access to capital. So the funding you need for your business. Next slide. So our programs help businesses with business loans to start, grow, and expand their business. We have programs that from microloans to regular programs. We have 7A and 504, the main programs. Those programs have competitive terms, lower down payments, flexible overhead requirements, and we also have counseling and education that go along with some of those programs as well. Next slide. So how can SBA-backed loan help you? So our programs help you launch, grow, or repair a startup. We do a lot of startup financing. That's one of the focuses of our program. Many lenders don't like to do startup financing because there's not a history of performance there. So it's always a greater risk in a lender's eyes on a startup business. We do have revolving lines of credit and working capital loans for day-to-day operating expenses. We have funds for purchasing, renovating, or expanding any facilities. We can finance inventory, equipment, and machinery. And we can also do real estate loans as well. And we also have exporting programs. So if you're looking to take your products overseas, we can help you finance that as well. Next slide. Increasing your chances of securing a loan. Lenders want to know that they're making a smart choice. So our resource partners that we mentioned earlier, the Small Business Development Center, the SCORE office, the NIC, the Women's Business Center, can all help you get prepared on your financial side and just your overall business package and presentation. They can help assist with putting your business plan together. They can review your financial statements, your expense sheets, and your projections. Having another set of eyes looking over your presentation before you approach a lender is always a good thing. You can get many different experiences and comments and assistance by using the resource partners. Next slide. So SBA partners with lenders. So we have a bunch of different lenders, especially with the PPP program going on, that use our programs. The 7A and the 504 program are not direct loan programs with SBA. We partner with our participating lenders to provide the funding for you. So those partners include banks, credit unions, certified development companies, micro lenders. We have some non-federally regulated lenders, some small business investment companies, and then we also have surety bond providers if you would need a surety bond in conjunction with your financing. Again, SBA doesn't do direct loans except for disaster. Disaster is our only direct loan program, and no direct grants from SBA either. If you're looking for a federal grant, the best place to go is a website called grants.gov, and this is only for federal opportunities. So if you're looking for state and local as well, or private, those would all be outside of that grants.gov. So that would be the best place to start for federal federal grant. Next slide. My suggestion as far as finding a lender is always starting with the lender that you currently have relationships with. Most lenders anymore are relationship based, and the more accounts you have with them, the better deal they'll probably give you because they know you and your business. If you're looking for another lender because you don't have a lender, or looking for another lender for competitive purposes, we do have an online lender match tool. If you go to SBA, if you search SBA lender match, or the direct website is SBA.gov/lender match. You can go through that. It's a questionnaire you can fill out. It'll ask you a few questions about your business, and it'll send out a message to all of the lenders that are currently rolled in lender match. They'll review the information you've put in, and if it's something that they think they might be a good fit for as far as financing, they'll reach back out to you as far as making a connection. You're also welcome to contact our office. We do have a list of participating lenders we can provide as well, but that is one way to connect with lenders. Next slide. So what are the SBA loan programs? As mentioned earlier, we have the 504 loan program, which the main function of the 504 program is financing real estate and equipment. It can do some other things, but the primary is real estate and equipment. So 7A is basically our meat and potatoes. It can finance everything, anywhere from working capital to inventory to equipment to real estate, any legitimate business need. Microloans, we do have a microlender in Fort Wayne. It's called BrightPoint. Their program goes up to $50,000 and can be financed over, I believe they just changed their terms with pandemic. I believe they can finance up to 7 years now. It usually is 6. Under the 7A program, we also have Community Advantage and international trade loans. Community Advantage, there's one Community Advantage lender in Indiana, and they are bankable out of Anderson. And then also we have international trade programs that the lenders can use as well. Next slide. So the two main programs, the 7A and the 504, are, as I mentioned earlier, 7A is the main program. It can finance working capital, accounts receivable, refinance, change of ownership, equipment, improvements, real estate, anything that business needs to operate and grow. And then, like I mentioned earlier, 504 is basically a financing tool for equipment and real estate. Next slide. So what is the 504 program? It's a fixed asset product. So real estate is a good portion of what 504 finances, but they can do equipment as well. It's long-term fixed financing. The maximum SBA portion of 504 can go up to $5 million. The structure on 504 loans is 50% of the funding comes through your lender, up to 40% comes through an SBA debenture, and a minimum of 10% in from the customer. And that could go up to 20%. There's an additional 5% requirement for startup companies and additional 5% for specialty use buildings. So it could go up to 20, but the minimum is 10. Can go up to, as far as dollar value, 5.5 million if you are in the manufacturing or in energy industries. And also for 504, there is a job retention requirement. So for every $75,000 of the SBA debenture portion of that funding, you need to at least have one job created or retained for the loan request. Next slide. So in 7A, as mentioned earlier, the maximum loan amount is $5 million. There's a small loan feature of 7A, that maximum is $350,000. The difference is basically underwriting requirements. It's not quite as extensive for the smaller loans as it is for the larger loans. And then Express is also a sub-program of 7A. That maximum loan amount is $500,000. They just increased that, but it is temporarily up to $1 million through the end of our fiscal year, which ends October 1st. Well, October 1st starts the next fiscal year, so September 30th. So under these programs, it's one loan through the bank, and it has an SBA guarantee on it. So the guarantee for under 150 is 85%, and over 150 is 75%. And then SBA Express, the guarantee percentage is 50%. So how the guarantee works is, if for some reason your business would fail, which we all hope it does not, and you are unable to pay off the loan, the lender will come in and liquidate as much as they can. And if there's a balance remaining, SBA shares in that balance recovery. So say you have, after all liquidation, $100,000 balance left. If you have, if your loan was 150 or less, 85% of that $100,000 balance will be paid by SBA to the lender, and the lender will remain with a $15,000 balance. SBA will pursue further collections on their portion through government offsets and other programs you may become involved with. But that, in a nutshell, is how the guarantee works. Next slide. What's new for 2021 because of the pandemic? Mentioned the 75 to 85% guarantee. For 7A, it goes up to 90% guarantee for the 7A loans, and the Express loans, the guarantee is also increasing as well. Also mentioned the loan amount increased to $1 million. For loans under 350 under Express, that increases to 75%. And then the larger loans over 350 under Express remains at 350. I mean, 50% guarantee. Next slide. So one of the things that the lenders are going to look at as far as your request for an SBA loan, as with traditional bank loans, they're going to review the overall package for creditworthiness. And that's going to include a review of your character, cash flow, collateral, your capital, and any conditions that may affect your business. Next slide. So under 7A, again, the maximum is 5 million. Maximum guarantee is normally 75 to 85%. That's increased to 90% through September 30th, which is the end of our fiscal year. However, the Congress did not increase the maximum guaranteed portion. So the most we can guarantee, the guaranteed part would be 3,750,000. So what that comes down to is normally our program is $5 million with a 75% guarantee is that 3,750,000. But they're allowing us to go up to 90%, but they didn't increase the 3,750,000. So if you want the 90% guarantee, the maximum loan would be $4,166,666. So in between that 4.1 million up to 5 million, it's going to your guarantee is going to shrink from 90% down to 75. So that's how that works. You can do multiple loans. So most small businesses don't need a large loan right out of the gate. They need lots of they need smaller loans, and then they need additional funding as their business continues to grow. So SBA can do multiple loans under the program as well. Next slide. So under 7A, there is a 10% injection from the borrower is required, and that is for startup businesses and changes of ownership. That is required, is 10% in. If it's not a change of ownership or a startup company, maybe your business needs, for example, to purchase some equipment. You already are established. That 10% in can be flexible. That's going to be a lender determination. So keep in mind that idea as well. So if outside of the 10% injection for startups and new businesses, if you've got equity and that you want to use for that 10% in instead of cash, that is an option as well. Borrowers are responsible for 100% of the loan payment. The guarantee and participation with SBA doesn't forgive you for participating with SBA doesn't forgive you for not making your loan payments. You still are committed to paying the loan in full. Next slide. Interest rates, SBA sets maximums, but they are negotiated between the lender and the borrower. We do have fixed rate and variable rate options. Most lenders we have a prime rate option, which most lenders use a prime-based interest rate. Next slide. Guarantee fees. Our loans normally have guarantee fees associated with them, and it depends on how much is being borrowed, and that ranges from 2% up to 3.75%. That can be financed in the loan. The exception to those fees are if you're doing like a line of credit that's less than a year, or just a small loan that you can get paid off in less than a year. The guarantee percentage is 0.25% of the guaranteed portion. But keep in mind, Congress has waived these fees through the end of our fiscal year, which is September 30th, 2021. Next slide. Guarantee fees for veterans under the Veterans Advantage program, which is part of the SBA Express program, they are fully waived, and Congress made that a permanent waiver this past year. So if you are a veteran, you might want to check into the SBA Express program if you're looking for funding. Next slide. SBA loan maturities. Our maturities extend normally beyond what a conventional loan lender would finance for. We base our maturities on repayment ability, the useful life of what you're financing, and the purpose of the loan. Our real estate loans, we can go out to 25 years, where conventionally most lenders are probably going to stay closer to 15 or 20-year terms. So we do allow a longer maturity on real estate. Equipment, we can go out to 10 years or useful life. So for example, if you want to finance a vehicle, most vehicle loans through your dealership and through lenders are going to want to stay closer to the useful life of maybe 3 to 7 years, but we can go out to 10. If you're financing, for example, manufacturing equipment that has a longer useful life than 10 years. We can go longer out to the 25-year max, as long as the useful life is justified and provided in the loan file and with the request. In working capital, we can go out to 10 years with some exceptions. For example, that's going to be like your lines of credit and your permanent working capital. We do have a line of credit program under 7A. It's called the CAP lines. Usually that's 1 year or less. Most lenders like to review credit annually on a line of credit to see how the business is performing. And when that loan can be extended out to 10 years. Next slide. So SBA structure, we like to see a structure that that borrowers can handle over the long term. So we like to see a structure of principal and interest payments. We are flexible. We do allow some interest-only periods. For example, if you're going into a new facility and you need to do your construction or build out, and you're not generating as much income, we can certainly set interest-only period for your construction draws. And then once your business is fully operating, we'll convert those back to principal and interest payment. We don't do balloon notes. We want to make sure the structure is reasonable and the small business owner can afford that. So a balloon note, for example, maybe you're looking to borrow $100,000. So the balloon note will set a payment. For example, we'll use $5,000 a year. So then after 5 years, the balance of the loan is due. So after 5 years, you've made $25,000 in payments. A balance of $75,000 is due at the end of 5 years. We don't feel that that's a reasonable structure for small businesses. So we don't like to see balloon notes. We want that to be termed out over the long term so the business knows the payment and knows that they can afford it for the balance of the loan. Next slide. Prepayment penalties under 7A, they exist for maturities of 15 years or greater. So you're basically looking at a real estate loan for the most part. And that prepayment penalty is in the first 3 years of the loan. The prepayment penalty is 5% in the first year, 3% in the second year, 1% in the third year, and after 3 years, that prepayment penalty requirement drops off and there's no prepayment penalty. Next slide. Eligibility, because we are the government, there are things that we can and cannot finance. Some of those include you need to be a U.S. citizen or comparable, because we are using taxpayer-funded guarantee money. We are serving the U.S. tax-paying citizen. So if you're a non-citizen or not non-tax-paying citizen, you don't qualify for our programs. Character issues, which is a form SBA 912. SBA is going to look at your criminal history as part of the loan request. If you have an outstanding felony or any charges within the last 6 months, or you have a violation against a minor, SBA does not fund those particular types of crimes. If you have a felony that has expired or beyond that 6-month period, or a misdemeanor, that's something we can clear. But if you have an active charge or a violation against a minor, that's something we can't finance. We're going to look at prior SBA loan performance as well as any other loans that you have with the government. So if SBA or the government has taken a loss past, if you have a charge off or anything like that, you're not going to qualify for financing. And then we follow our programs for the Small Business Administration. So that's determined by your business code, which is your NAICS code. There's a table online. It's about 40 pages long, and that breaks down each code by gross revenues or number of employees. So you can go out there and see your size standard. It is fairly high. I'm going to say 500 to 1,000 employees for the most part is the average number of employees. And gross revenues it's got a wide range of gross revenues, anywhere from 10 million, I've seen, up to 25 or 30 million. So as a small business, that's a pretty sizable range there for that we can finance, but we want to make sure that our small business owners are receiving are able to receive financing that they need. Next slide. Eligibility, there are some types of businesses that we cannot finance as well. Some of these include nonprofits. Nonprofits don't pay taxes. That is why we cannot provide them regular financing. Now, under the PPP program, that is an exception, and they do qualify for that particular program, but general programs, they do not. Lending institutions, passive businesses would be real estate holding companies, for example. If your business, if you've set it up where you own your business and that's under one entity, but your operating business is actually a separate entity, we can provide financing for the building for the the passive company, that real estate holding company, as long as the operating company who's generating the income to make that payment also guarantees the loan. Insurance companies, and I like to include franchises in this one. The issue becomes who has control of the business. We want our business owners to have full operational control of their company. And some insurance companies and franchises dictate what that business owner can and cannot do. So as long as you have full control of your company, SBA can provide financing. And the franchise agreement, if you're a franchise, does need to be reviewed by SBA, and the eligible franchises are on the website under, if you Googled franchise, SBA franchise directory, you should be able to find which ones are pre-approved and which ones are not. If you're not on the list, it doesn't mean that you're not eligible necessarily. It means that SBA probably hasn't seen the franchise agreement to make a determination. Again, you have to be a U.S. citizen, and we want our businesses to be in the United States territories as well. Pyramid companies such as Amway do not qualify. Illegal businesses, of course, do not qualify. Private clubs that restrict customers does not qualify if we're providing government financing. We want your business to be open to the public. Government-owned entities, cooperatives, packager, conflicts of interest. If you have a board of directors, for example, and one of them serves on the board on the bank, that we wouldn't be able to provide the financing through that particular bank. We would want you to make your request through a non-associated bank. Loss to the government, we've talked about. Political activities, you can't take your loan funds and go to Congress and lobby for your industry for more financing and such like that. Speculative businesses, playing the stock market, that kind of thing does not qualify either. Next slide. Use of proceeds. What can you use with our loan funds? So again, our loans are here for any legitimate business purchase or operation that you may need. So anything from financing startup businesses, purchasing assets, expansion, just general day-to-day working capital needs for receivables. If you're a seasonal business, we can finance your seasonal business. We do construction loans and we can do refinancing, but we do have some refinancing guidelines to follow as well. Next slide. I thought there was, so going back to the last slide, the refinancing, the SBA wants, because there's fees associated and with our refinancing and our programs, we want it to make sure it's a good fit for the customer. So in general, it has to be, if you're refinancing a term note, the payment and then refinance needs to be 10% or greater for the business owner. So we want it to be a positive experience for that business owner, is one of the refinancing guidelines. As far as eligibility on this slide, types of businesses, use of proceeds, startup businesses, refinancing, and then the use of proceeds on the next slide. Some things you cannot use your use of proceeds for are ineligible is to pay out a business associate and do investment purchases. If you've got an investment property, we don't finance investment properties such as apartment buildings, for example, or if you're going to purchase a building or build a building, you have to occupy at least 51% of an existing building or 60% of a new building. You can rent out the remainder of the property for a little bit of income. If you're doing a new building, for example, you have to occupy at least 60% with the intentions of occupying 80% at some point and within 10 years. So we want to allow you to build that building with, and if you have the intentions of growing and expanding, having space for you to do that. Next slide. SBA's collateral policies, we want to be fully secured as much as possible, just like a normal lender would, up to the recovery value, which is basically your loan amount. So we do look at personal assets. If there is a shortfall of business assets, and personal guarantees are required. For example, on our collateral policies, if you have a loan request and your assets don't cover the entire loan request, we're going to look to personal assets, such as a second mortgage on your home, or if you've got a vacation home, or any other assets that would be available for collateral. We're going to look to those to shore up that difference between the shortfall amount and the outstanding loan balance. If all assets are pledged and there's still a shortfall, that's something SBA can work with. So keep that in mind. Collateral shortfall on its own is not a fully acceptable decline reason. So it has to go along with like a cash flow deficiency or something like that as well. So, but it does also need to be reasonable. So for example, if you're a college student and you're coming out of college and you have no assets and you've got a lot of student loan debt and you want to borrow $1 million to start an IT consulting business where there aren't going to be any assets, that's probably not a reasonable request. So the bank was definitely going to want to see a business plan and cash flows and how your income is generated. And it might be better to start with a smaller type loan and grow into that larger loan that you're looking for. Personal guarantees are required from anybody that has 20% or ownership in the business. That doesn't mean if you have a business with 20 owners at 5% share, there won't be a personal guarantee, because there will. SBA will look to the primary players of that ownership to provide that personal guarantee. Next slide. SBA Express, they've increased that limit to $500,000 this year with a 50% guarantee. And again, with the stimulus, the pandemic, that's increased to $1 million with a 75% guarantee on loans of $350,000 and less through September 30th. So this Express program is a quicker moving program. It allows the lenders to make the approval decision on their own without SBA's review and approval. So we're basically granting lenders the ability to make those decisions on behalf of SBA. So the SBA Express program works just like the 7A program as far as what we can finance. All those apply. So eligibility, the size standards, repayment, maturities, guarantees, servicing, all the same as 7A. Next slide. So that wrapped up our financing. I know that was a lot of information to digest. So the next part of the presentation talks about surety bonds. So if you're a business that needs bonds to operate, maybe such as construction, we do have bonding programs through the surety bond program. So, and our programs do have reduced fees and just some additional benefits that might be of assistance and advantage to those businesses that need a bond of some sort. Next slide. If you're looking to expand your business overseas, we do have programs for that. And so we do allow you to branch out your business to other markets. So next slide. So our international trade, we do have international trade and exporting programs. Nearly 96% of the world's population do not live in the United States. So if you want to reach out to those customers in that those areas, you're certainly welcome to do that. And we do have programs to do that. 2/3 of the world's purchasing power comes from foreign countries. And you can evaluate your readiness and check out our exporting programs at SBA.gov/exporting. Next slide. So we can help you go global if you want to take your products overseas to other countries. We do have training and counseling through the Export Assistance Centers, the UZACs, and the Small Business Development Centers also have information as well as far as getting you up and running to go outside of the United States for your business. We can help you find buyers internationally through the State Trade Expansion Program, the STEP program. And we can also provide assistance through funding. So we have Export Express, and we have a working capital program and an international trade loan. In addition, if you're looking for financial assistance, our programs can partner with Ex-Im Bank as well as far as getting you capital and financing needs. Next slide. So if you're looking to go global and want to go overseas with your business products and services, our international trade representative, our U.S. Export Assistance Center is in Michigan, and the contact is, his name is Romy, but his full name is Romalu. Excuse me, I'm sure I'll get the name pronunciation all messed up. Ramalad and Cog, but he goes by Romy for short. And he is the lead international trade and finance specialist, and you're welcome to reach out to him with any questions that you may have. Next slide. So what happens in a pandemic, or what happens if something tragic happens to your business? We do have disaster programs that we can overcome your adversity. So next slide. So I'm sure everybody here at this point in time has felt the impact of the pandemic over this past year, and that's why our disaster programs exist. It's estimated that 25% of businesses don't reopen after a major disaster, and unfortunately, I think parts of our economy are feeling that impact at this point in time. Our programs can provide financing for disaster type situations, and we also have information on how to prepare for a disaster. If you're interested in reviewing that, you can find that information at SBA.gov/prepare. Next slide. So our disaster loan assistance can cover any type of need as well. There's different types of economic disaster programs. For the pandemic, we have the economic injury disaster loan, the EIDL loan, I'm sure which most of you are familiar with. And then there's physical disaster loans as well. So for example, the big storm that we just had in the southern region of the United States, with them losing power, that is going to fall under a physical disaster as well. So they'll qualify actually for two different disasters, one for the pandemic and then one from the physical disaster. The disasters do need to be authorized as through a designation through Washington, D.C., but they are available. So anything from real estate needs to personal property to economic injury, we can finance machinery, equipment, inventory. We do have active military qualifications as well. Next slide. So that wraps up the presentation. What questions do you have? I know it's a lot of information I talked about there, but I'm happy to answer any questions you may have.
Well, Luann, thanks for really holding on there when we had technical difficulties. So we do have some questions, but I wanted to quickly go over to Jim and just find out from him, what does it mean to be for Premier to be a preferred lender? And should businesses look for those entities first when they're looking for loans?
Sure. Can you hear me?
Yeah, go ahead.
Great. Lisa, if you don't mind, let me just can I give a quick spin on who Premier is? That might help lead into this. But Premier Bank, we've been working in the Fort Wayne market, some may or may not realize, for probably about 15 years or more. We currently have 3 offices, which, as far as banks go, maybe is not a lot of offices. And so you don't necessarily see us a lot, but we have been here for a long time. We're a $7.2 billion asset-sized community bank. Banks are often measured by the size of their assets. We have a holding company that's headquartered in Defiance, Ohio. Our bank is headquartered in Youngstown, Ohio. Our footprint ranges all the way from, on the western side, Fort Wayne, to the eastern side would be Pittsburgh, Pennsylvania. We're in southeast Michigan and all the way down to Columbus, Ohio. So just a nice size community Midwestern bank. We deal with businesses, loans and deposits, lines of credit, equipment, real estate, construction. We deal with consumers, loans and deposits, mortgages, home equity lines, car loans, things of that nature. We also have an insurance company as part of the holding company. So we're a well-rounded, full-service community bank. Part of being a community bank, we are also a preferred lender with the SBA. And a preferred lender means we have experience with SBA lending. And so the SBA has granted us some authorities from time to time, primarily as it relates to underwriting loans. They are relying on our expertise and our experience to make sure things are in order and are appropriately done. At Premier, we have a team, an SBA team, that's all their focus on. They focus on supporting bankers in all of the markets to provide SBA lending. So we have some real experts and we lean on them regularly. So to answer the question, now that I've given that background, the answer is yes. I would recommend anybody that's looking to do an SBA loan to look to a preferred lender, primarily because they're going to be experienced, they're going to have done them before, they're going to know all the ins and outs and the details, because there are a lot of details that come with SBA loans, and it's important to have somebody you can trust.
And I just wondered, maybe from you as well as Luann, with there having been a pandemic, are you seeing certain types of new small and medium businesses that are coming back, that are expanding, that are maybe, doing a second location? I'm seeing, restaurants actually doing second locations on that. Are there anything that you're seeing as a trend right now?
I would step in and I'll weigh in first here, if you don't mind, Luann. What we're seeing in Northeast Indiana, the economy has actually, believe it or not, been really strong. I think we're hovering right around 3% unemployment is the latest statistic I heard. Our manufacturing clients are looking for people. The biggest thing we hear right now is trying to find people. But as a result, they're expanding when they can and where they can. But what we're seeing the most as it relates to the SBA is there's a lot of acquisition financing taking place, whether it's one company buying another or it's employees of a company buying out the current ownership. And many times that leads itself to requiring an SBA guarantee to support the purchase of the business. Luann?
Thanks, Jim. That was great. It's good to hear. As a district office, we don't process applications out of the Indiana district office. We'll just work with our processing centers in California for our new loan requests. So on a daily basis, we don't see what types of businesses or requests that are actually being requested until we pull reports on a monthly basis. So, and I haven't been so busy with the Paycheck Protection Program and the disaster program that I haven't had a chance to check out those new businesses that are actually starting up and growing. So thank you so much for the great information.
Okay. We do have some questions from Steve. So what, like maybe we'll start with Jim. What is the most common mistake made by first-time borrowers?
That's a great question. What I would say, and this is my opinion, what I would say the most common mistake is not being prepared. And that's where some of the centers that Luann referenced early in her presentation, like the Northeast Indiana Innovation Center or the Small Business Development Center or SCORE, those organizations can really come along individuals and help them be prepared to have a business plan, to be thoughtful about presenting to a bank what it is that they're going to do, how they're going to market their business and their product, and then obviously the financial component that we're all concerned about, which is how are they going to generate revenues and profitability to be able to repay loans. So I guess the most common mistake is maybe winging it and not getting the business plan and the details in place to go have a good conversation with a banker.
Yeah, I would agree. I thought that those are great comments, Jim. Just to kind of build on that, couple of examples, I guess, that I've dealt with locally. Our SCORE office in Indianapolis is right across from the hall from our office. So every once in a while they'll pull us over to talk to a customer. I'll give you a couple examples. I talked to a customer that he wanted like a medium $10,000 or $15,000 to start remember the little fidget spinners they had, and they cost just a couple of dollars. And so I asked him what his financial needs were and how he planned to spend the money and what his turn time getting his funds back was going to be. And he didn't know the answers to all of those questions. So I said his idea was I was going to take $15,000 loan and go buy all these fidget spinners, and it's going to last me maybe hopefully a year. And I said, well, how long is it going to take you to get your money back? And he goes, I'm hoping to have it back within a month or two. And I said, well, what happens when the fidget spinners lose their glam, or an updated fidget spinners come out in maybe 6 months, and then you're left with all the old versions and you can't sell them? And he goes, my thoughts are, get enough supply to last you a couple months where you're getting your money back in, and then you can go buy more and that turn time. So just that, understanding how your business operates and what how your financial needs meet that. Another request I had, a borrower, I think he had a carpet business or a flooring business, but his passion was motorcycles, and he's always wanted to own a motorcycle company. And he went out and took out a larger loan, like $25,000 from a high interest lender, because it was a startup company and there was no experience, but he wanted to have his motorcycle company, and he wasn't generating the income to make the loan payment. And then he put himself in a unfortunate financial position because he was unable to make his payments. So he was trying to find avenues to restructure his company to save both his carpet business and his motorcycle business. So had he gotten some guidance from the resource partners to help him structure that financing and understand the turn times and understand how the business really should operate, he may have not been in that position in the first place. So those are a couple of real life examples that I've worked with, as far as making sure you know what you're getting into, how the business operates, getting advice, having your business plan, approaching your lender and saying, I need this much money, I'm going to use it for this, this, and this is how my income is going to come in to repay that loan, is so very important for success. Are you there?
Sorry about that. Sorry.
Okay.
Unmute. Another question we had is what is the useful life of solar and wind energy devices?
I would
That's
like to, I would like to
go
defer
ahead.
that one to Luann. No,
Yeah.
I'm kidding. That's a great question, but not one that we see often. Obviously in Northeast Indiana, as we cross the border over into Ohio, and our bank has offices over there. So I've spent time in Northwest Ohio, large wind farm over there. But we don't see a lot of requests for solar and wind. We don't deal in that industry a ton. But typically, when I have seen requests related to solar or wind, it's usually tied to two things. Let's speak to the wind first. The wind is usually tied to the contract that the entity is going to form with the electric company. So the electric, it's more contractually based and less asset based, because the contract with the electric company is what's going to drive the cash flow to the business. On the solar side of things, it tends to be more payback period. How long is the payback for the solar power? I do have one client that put solar panels on their roof, and there was a payback for the investment, and we appropriately tied the term of the loan to that payback period. Solar, there can be a payback in under 10 years, and so I think it would be expected to see something less than 10 years from an amortization there. Wind, you're going to see probably upwards of 20 years would be my guess. But again, we don't deal in a lot of wind. It's a highly capital intensive business. There's a lot of testing that has to go on to make sure that the wind is there. Sounds strange to say, but that the wind is there to generate the power that the electric company is going to want, and consistently.
Yeah, to add to Jim's comments, as far as the useful life of equipment, generally on the equipment itself, as in SBA's eyes, they'll look at the manufacturing information that goes along with the equipment on how long the manufacturer estimates the useful life to be. Now, in conjunction, like Jim had mentioned, you have the contract side of the wind and solar type of industry. So with that comes the contract and the financial side and the repayment side. So a lender's aspect is going to want to see, in addition to the collateral value of the equipment itself, the actual collateral value of the contract itself too. So you actually have two different aspects in the energy type industries.
Okay, and I know, Luann, you talked a little bit about some women-owned and veteran-owned businesses. Is there anything, Jim, specific to Premier Bank in those areas, or as well as minority-type businesses?
We're a fair lender. Obviously, all banks are regulated, and fair lending is an important piece of that. So I would say we don't have specific programs for women or veterans. Our lending is fair for everyone. However, some of the programs that Luann mentioned can separate a client. For instance, I have a client that is a women-owned business, and as a result, she does get a certain portion of her revenue is generated from government contracts because of some of the requirements that the government has to work with women-owned businesses. So it's a differentiator for her, and it makes her business stronger, better business, makes it more desirable then for the bank to want to loan money to. So our loans and programs are the same across the board, but when they work with some of the programs that Luann mentioned, then it just makes them a better business.
Right, I agree with Jim. Due to the Fair Credit Lending Act, all financial programs need to be available to everyone on an equal basis. So there no longer is a preference for women-owned or veteran-owned or minority-owned, etc. The only advantage we have as far as our lending programs go is the fee waiver for veterans, and that's pretty much it, because everything has to be available on an equal basis. And as Jim mentioned, where those designations come into play is on the SBA contracting side. So if you're a women minority owned business, that's going to give you more points and consideration in SBA issuing government contracts to those types of businesses. So it's more on the contracting side than it is the finance side.
Okay, well, we're going to go ahead. This was very informational today. And I just wanted to see if Luann, you had any last minute things that you wanted to tell people?
As far as the regular lending programs, I think we've covered it all, or a lot of it, at least to give you some basic knowledge. And then if you've got, I know we're still working crazily on the PPP program, and I was actually detailed to disaster side of SBA for a while this past year as well. So those programs are still going strong to help businesses that are struggling. So if you have questions about that, feel free to reach out for those as well. But I don't know that I have anything additional to add at this point, though.
Okay, what about you, Jim? Anything else you'd like to say about Premier?
Sure. I guess, final comments for me would be, I'm going to go back to something Luann said early in her presentation, and that is, in working with banks, it's often relationship based. And that is so true. And, our goal at Premier is to have a relationship with our clients. So we want to be a partner. We want to be an asset. So as you're looking to do business with a bank, don't look at that as an adversarial relationship, but look at it more as a partnership. No matter who you're working with, that would be my encouragement to you. We're here to help. The SBA is a great resource. They have a lot to offer through their different programs and through some of their partner relationships. They can help you from beginning to end, all the way from business plans to getting financing. And so I encourage anyone to utilize the SBA and look at it as that asset and that resource, and then find a bank that you're comfortable working with. And we'd love to be that choice at Premier.
Great, thank you. So we hope that you've learned now, how your business can get help from the Small Business Administration and Premier Bank. And we want to thank you, both of you, for today's presentation. If your question did not get answered at today's event, the SBA and Premier Bank have graciously agreed to respond in a follow-up email to everyone who registered today. We'll send out the video to everyone who's registered. So be sure to share it and sign up for our next webinar that we'll be posting soon. We are trying to do these once a month. Be sure to register at www.kpceventbuzz.com/webinars. You can also register by going to fwbusiness.com and pulling down from the events on the menu bar to click on webinars. The webinars, again, are free to Business Weekly subscribers. Non-subscribers will pay a small fee. If you want to see more information about our first webinar, Paycheck Protection Program, a PPP update, go to www.kpceventbuzz.com and look under the webinar pull-down menu. If you would like to be a presenter at an upcoming webinar and have a good timely topic to suggest, please go to that webinar's website on KPC Event Buzz and get in contact with our staff. And I want to thank Luann and Jim again, and have a great day, everyone. Thank you.